You guys asked, and I have prepared some more educational content for you for trading. Over this weekend, I have prepared slides to help you more understand how to trade, how to analyze the markets, and more about my trading system. I'm gonna give you a presentation first, and then we're gonna move into real live trading market examples. And everyone thinks that trading needs to be complicated. But for some reason, 98% of traders, yes, including you, are always trying to overcomplicate it and make it seem like it's impossible to figure it out. And I get it, You want to know every concept and every strategy out there, so it's best for you and you're more confident when you take your trades. There is a reason why I use one simple approach and one single strategy when I trade. And it's the reason why I'm able to take trades like this. For example, making $35,000 trading live, making $39,000 trading live in 4 minutes actually, and how I made $91,000 in weeks trading gold, okay? So over multiples of trades, I've been able to prove this concept. You need to realize that hopping between strategies and concepts does not equal to consistent wins. It's actually opposite. In this video, I will show you exact same strategy that made me profitable trader and that I have tested over thousands of trades, back tested and forward tested over like 7 years that I've been trading. First, your bias tells you whether to look for buys and for sells. Every single time you sit at the charts, first thing you need to answer yourself, whether am I going to be buying this specific asset or forex pair or metal, or am I going to be selling? So to figure that out, you need to first start with looking at the higher time frames, such as weekly, daily, or whatever style you're trading. You need to check at the higher time frame confirmations to determine if the market structure, market movement is bullish or bearish. But this alone is not enough. You need to look at where liquidity lies. You need to find the supply and demand zones. You need to find the imbalances in the markets. And that leads me to next step, number 2. You need a price level where big players like banks and hedge funds are likely entering and exiting the trades. So for that, I personally dropped to 30 and 15-minute time frames to find those supply and demand zones. I want to look for an indecision candle before the biggest move inside of the trading session that I'm trading. Because that indecision candle is basically accumulation of liquidity, and that big push after that candle is a confirmation that there's enough liquidity accumulated in that indecision candle where the big push happened afterwards. So after you find the direction you want to trade, after you find supply and demand zones, you need to wait for the price to return to that level. So let me see if I can draw it here, okay? So first you find which direction the market is going. And when the market is here, you want to figure out where you want to look for those entries. So that's going to be your demand zone. This is where you're going to be looking to enter the market. Now, just the price touching this level is not enough, okay? You need the price to tell you that it wants to go continue higher, and it is respecting that level, which leads me to point number 3. Even if you have the right bias and zone, price can still fake you out. Entry confirmation at your supply or demand levels protects you from being the liquidity. I have multiple entry confirmations. Some of them are liquidity sweep, shift in structure, or reversal pattern. You need to place your stop loss just above liquidity sweep for sells or below for buys. So for example, if you are entering, the market is moving like this, that's going to be your demand. And if you're entering right here, okay, your stop loss needs to be below this level. So if the price comes back to test this level again, you're protecting yourself from getting stopped out before the price moves higher, okay? So now I want to jump onto the charts and show you a real-time example. Here we can see a Euro GBP chart. Like I just told you, I always start with a higher time frame analysis. I start with a weekly time frame, and on the weekly time frame, I see that the previous weekly candle was bullish engulfing. So it's more likely than less that this next week there will be bullish momentum following. Okay. I also look at the daily market structure. For my new students, for my new traders, what I like to show them is you can change it. Let me change the color. You can change it to a line chart for you to remove the noise and help you to identify what is the market structure. Here we can see, higher highs and higher lows forming, which shows me that we are in a bullish market. So I only want to look for buys in that specific asset. Once identified that I want to only look for buys, now I need to find the zone. Remember, I just showed you a zone where I want to take those buys. I'm sorry, this is still black. Okay, so I need to find the zone where I want to take those buys. For that, I drop to lower time frames, such as 30 and 15-minute time frame. As I am looking at a 30-minute time frame, what do I see? I identify an indecision candle followed by a big push. What does that mean? This indecision candle has accumulated enough liquidity to have this massive push following. Not just that, we also have this respective level, this respective level, this respective level, and this respective level that we are at right now. Like I said, just touching the level is not enough. The last step, number 3 step, remember? The third step is the entry confirmation. So I drop to even lower time frames. Between 1 to 5 minute time frames, I need an entry confirmation. In this case, I was looking at a 5-minute time frame. What was I seeing here? The price was consolidating here, okay? Then we created a lower low, then we created another high, and we created a lower low. I don't want to buy just yet. Why? Because on those lower time frames, we're forming lower lows and lower highs after we broke out of this range. So even though higher time frames is telling me bullish, even though I have a demand, the last thing I need for the price to shift in market structure or give me a liquidity sweep. For example, if this was consolidation, I would need a sweep of liquidity here, and then I would enter the markets. In this case, I had a different entry confirmation here. So now we created lower low, high, lower low, high, higher low, and higher high. So we have from a downwards moving market into a upwards moving market. So now I have higher time frames telling me bullish and now lower time frames telling me bullish. So I enter on the breakout of the structure or on the retest of the structure. Let's say for this example, we do a breakout of the structure. Now you have 2 options for your stop loss. More aggressive entry and more aggressive stop loss is for you to put the stop loss below your market structure. More safe option, you can choose whichever you want to do, whichever you feel comfortable with, is putting your stop loss below the demand zone. So you have options depending on your risk tolerance. In this case, let's use this as our stop loss below the market structure. We're targeting at least 1 to 3 risk to reward. I actually entered this trade myself. I actually share these results. I believe I have it on my YouTube channel here. And that's how the setup plays out. Nice and simple, systematic, repeatable process. Remember, consistent analysis equals consistent results. If you don't have a systematic approach to your trading and you're trading different things every single day, you're doomed to fail in trading. So if you want to learn this exact model in more detail, how I also manage these trades, because you need to manage the trades, how I determine my risk, also get access to these tools, click the link in the description, join the Hidden Edge, and I'll see you there.